Are stocks and bonds enough to give you the above average returns that you're looking for? Well, if you're a wealthy millennial or Gen Z, your answer might be no. According to a Bank of America private bank study of wealthy Americans, 72% of young investors are looking for alternatives, be that cryptocurrency or real estate or even art and collectibles. And for more, we welcome in Drew Watson. Drew is Bank of America's private bank head of art services. Drew, thanks so much for hopping in studio with us.
Brad, thanks for having us today. Pleasure to be here.
I mean, we were able to connect at one of the events taking place earlier this year at TAFOF. And I mean, it was amazing walking around, getting the vibe of how many people are looking to invest in art right now. I mean, what is the delta that we're seeing, just broad strokes right now, year over year for the industry?
Yeah, it's really interesting. So you mentioned the study that we did of wealthy Americans, and what we found from that study was if you looked at older generational cohorts, whether they're the kind of Gen X or boomers, about 20% of wealthy Americans, that's Americans with about 3 million of investable assets or greater, are art collectors. That number doubles when you go to the younger generations, Gen X and Gen Z. So 40% are art collectors. An additional over 40% are interested in art collecting.
Why do you think that is?
Well, I think it's because of a couple of reasons. One is that, and this has really come out in our study as well, one is that the younger generations have had a different wealth journey than previous generations and have different values. So talking about the wealth journey, they've lived through two major market corrections, the dot-com bubble bursting and around the year 2000, of course, the financial crisis in 08 and 09. They've also lived through one of the greatest bull markets in history. So younger generations of collectors or investors like to be opportunistic. And they're also gravitating more towards alternative investments, tangible assets, and art is a part of that overall thing. And then I would say just lastly, the values of that generation. This is the generation we've always talked about being more interested in experiences rather than possessions or objects. Art is both.
I mean, I've seen some amazing sums for things like Michael Jordan's old shoes. I did a write-up on that a couple years back. And then I've even gone to some auctions recently, going to great events like we were talking about at the top of this conversation. And it's amazing seeing the range of collections that people are looking to amass. How, for the younger generation, are we seeing those collections shift because of what they grew up being interested in as well?
Absolutely. So whereas older generations may have been more interested in historical art collecting categories, for example, American paintings or Impressionism, we've seen a real generational shift with younger generations being really interested in contemporary artists, particularly women artists, artists of color, and also collectibles very broadly, jewelry, watches, wine. Again, it's part of the overall lifestyle.
When we think of, and we're taking a look at some of those top collectibles as well, I mean, a lot of people were looking across the broader art industry as well. And it kind of had this point in 2021 where we were talking about NFTs, the NFT of everything.
Absolutely.
Are NFTs dead because people are looking for real, tangible collectibles right now?
It's a good question. So I would say speculation in NFTs is dead. There was certainly a moment where kind of during the pandemic, everyone was leading more of a digital existence, if you will, that market really got overheated. Now it's cooled off a bit, it's rationalized a bit, and it's more focused, I think, on quality, on curation, just like we see with a lot of other categories.
Of the art market dynamics that you're seeing play out right now, what's the most fascinating shift or most fascinating stat that you're seeing as a result of activity this year?
Well, this year we really find ourselves in more of a buyer's market than a seller's market. The property that is coming to market is likely of the highest quality. So property that will sell well regardless of what market conditions we're in. So we're coming out of a period where we've had historically high interest rates. That typically slows down the activity in the art market as it does in the broader economy.
I didn't expect that correlation between interest rates and the art market there.
It's interesting because if you think about art and who the collectors are, a lot of them are very markets-driven, commercially savvy individuals. They've created their wealth through private equity or hedge funds or as business owners, and they understand art is an illiquid asset that is a store of value but doesn't generate any sort of cash flow or dividends. So the interest rate environment, you could think of it as almost the opportunity cost of locking up capital in this type of asset. So when interest rates are high and returns in fixed income are higher elsewhere, it makes it harder to justify from a financial perspective locking up more capital. Also harder to borrow, and so liquidity is a little bit harder to come by. Although we found in our lending business, we're the largest art lender in the industry, that collectors or our clients in general are really getting used to the interest rate environment, especially as broader economic activity is picking up, and they're using their art as a practical source of capital.
As a back to the lending that's taking place as well.
Exactly.
Interesting here.
Exactly.
All right, we're going to dive back into this even more in the future. Drew Watson, Bank of America Private Bank Head of Art Services, joining us here on set. Thanks so much for the time, Drew.
Thanks for having me.
Great to see you.